Welcome you to our session conducted by our YouTube channel SL Account School. Today's topic would be preparation of final accounts. This refers to the preparation of financial statements. We are hoping to deal on the first two today. Profit and loss account can be one-step account where all expenses are matched with all incomes and the net result is arrived at. Alternatively, this can be a multi-step P&L which will have manufacturing account, trading account, profit and loss account, appropriation account, etc. Each of them giving different useful information. For an example, trading account, even though it's only a part of P&L, this is made in order to arrive at or determine the gross profit or top line. All direct expenses are written off in trading account. Direct expenses refer to incurred in order to bring the product to a saleable condition or to the point of sales. Carriage inward is treated as direct expenses and therefore written off in trading account, whereas carriage outward is treated as indirect expenses and written off in profit and loss account. Also, any direct expenses on sales will be absorbed into the sales and net sales only will be shown. Two formats of trading account and a P&L account is shown here. Dear students, since P&L and balance sheets are prepared most of the time together, is misunderstood as one, but it is not really so. While profit and loss account is part of a proper ledger accounts, balance sheet is not an account at all. P&L is part of double entry. Balance sheet is only a glorified trial balance pricing of real accounts, excluding all nominal accounts. P&L shows financial performance, balance sheets, financial positions. Net results of P&L will be shown in the balance sheet as it is a real account, namely equity. Dear students, let's look at some practical examples. The company's trial balance as at 31st October year end is shown here. Buildings at cost 740, accumulated depreciation 60, plant at cost 220, depreciation accumulation 110. Bank balance is an overdraft of 70. Other account balances are also given. Additional informations are available, first of which the provision for doubtful debt is to be increased to 5% of the trade receivables. Please look at the working 3. Trade receivable is 320, 5% of that is 16. It's already a provision of 10, only 6. The difference will be charged to the administrative expenses. The second information, plant is depreciated at 20% per annum using the reducing balance method, and buildings are depreciated at 5% per annum on their original cost. Depreciation is treated as a cost of sales expenses. Please look at the working 2. Property at cost is 740, 5% of that is 37. For plant, depreciation is provided on written down value, that is 220 minus 110, which again is 110 into 20% is 22, giving a total depreciation of 59, which is adjusted in the cost of sales as be required in the question. Closing inventory is 75. Please look at the working number 1. Fourth information, an invoice of 15,000 for energy cost relating to a quarter ended November and therefore only September and October payments refers to the current period and to be shown as accrued expenditure. Please look at the working for. After the adjustments, profit and loss account and balance sheets are prepared. In profit and loss account, look at administrative expenses. There are 325 given in the trial balance. 10 is provided as energy cost and provision for bad debts. 16 minus 10, 6. In the balance sheet, under trade receivables, net 304 after deducting a provision for doubtful debt 16 is made. For trade payables, 10 accrual is added. Hope the students have understood the question and the answer clearly. Let's move on to the next question. This is about manufacturing account, which comprises of raw material consumed along with direct labor and direct material, prime cost, and with all other overheads, the complete manufacturing cost. The special feature is work in progress. Production may not be completed on the date of the account and will be carried unfinished work into the next period. In the information given, raw materials, work in progress, direct expenses, and overhead expenses are given here. Under further information, closing inventory, raw material and work in progress are given. Number 2, 90% of the floor area of the building belongs to the factory. Plant and machinery are fully utilized, 100% for the production processes. Therefore, depreciation provided for these two assets will have to be adjusted. Depreciation on plant and machinery 100%, which is 110,000, and 90% depreciation on the building, which is 121,500. Number 3, the expenses are to be allocated in factory and the office. Electricity 90%, water 60%. 90% of 360, 324, 60% of 180, 108. Fourth adjustment, an additional incentive of 100 per unit for each unit produced is entitled to the production workers other than the direct wages. This need to be calculated since the unit produced are 600, the amount is 60,000. With the adjustment, the following manufacturing account is prepared. 1, giving the raw material consumed. 2, prime cost. 3, total cost. Note, the incentive of 60,000 is added to the direct labor cost of 890. Okay, now let's move on to the next question. In this sum, trial balance as at 31st March 21 is given. Since we could not accommodate them in one slide, we have spread them into 2. Land and building 3,600, out of which land is 1,400, indicating the building is 2,200. Under the additional information, closing stock is given. 2, all depreciations are provided on straight line basis. Different percentages are given here. Please note working 1. Adjustment 3. Insurance of 1,560 is relevant for the period 1st January to December. Only 3 months belongs to this period. Therefore, 9 months will be prepaid expenditure. Please look at working 2. Insurance of 1,560 into 75% of that, 1,170. Adjustment 5, electricity bill and salaries and wages to be provided as accrued expenses. Please note the working three and also look at the balance sheet part of it, where accrued expenses of 2,650 is shown. Adjustment 6. The customer was declared bankrupt, therefore a bad debt of 100,000 to be written off. Please look at the working 6. We missed the adjustment 4. Part of the building was rented out for 100,000 a month. 10-month rent have been received. Therefore, the 2 months will have to be provided as accrued income. Please look at working 5. Now let us look at the answer. Statement of comprehensive income for the year ended 31st March 2021. Turnover 114, cost of sales 71, giving us a gross profit of 43. Along with the rental income, it is 44.2. Expenses are shown under 3 categories. Distribution expenses, covering advertisements, discounts given, bad debts written off, motor vehicle depreciation entirety is written off here since these are about motor lorries, distribution vehicle. Second category, administration expenses, covers electricity, insurance, telephone charges, salaries and wages, depreciation on building and equipment. The third category is finance charges, shown here separately, giving us a net profit of 2,430. Now let's look at the balance sheet or financial position statement. Non-current assets are shown here on the recommended format, which demands the historical cost, accumulated depreciation, and the present written down value. Current assets are shown by showing the least liquid assets at the bottom. A total asset of 30,480. These assets are financed by equity and current liabilities. It is necessary to show the equity movement which is shown here. A total of equity and liability 30,480, which tallies. Hope the students have understood. We recommend more and more exercise like this in order to get a good practice and understanding of the subject. Dear students, as you all know, these classes are provided to you by our YouTube channel, SL Account School. We kindly request you to subscribe, share and like and promote among those who are interested. Thank you very much.